this is P13-45B. So we're going to journalize certain dividend and treasury stock transactions and then use those to prepare the statement of retained earnings and the stockholders' equity portion of the balance sheet. So let's start with this one. It looks like we have a small stock dividend. And so with small stock dividends, we're going to have to factor in the market price here. If you remember, large stock dividends are different. So you have to make sure that you're knowing if this is a small or large stock dividend because they have different accounting treatments. So in this case, it's under our 20%. So we're going to use the methodology for small stock dividends. So the first thing we're going to do is basically have our stock dividend here, and the amount is going to be based on this $20 per share. So let's think about how many shares are going to be involved. So it's a 5% stock dividend. So we need to know how many shares are outstanding. So let's see. So there's 22,000 shares issued and outstanding. So we have 22,000. It's 5%. So we're going to be basically having 1,100 shares as a stock dividend, and they're each worth $20. So it's $22,000. Okay, so now how do we do the credits? Well, we know we're going to have common stock. It's issued. But we see here that the par value is only $12 and the market value is $20. So we're going to have some extra paid in capital in excess of par for common stock. So again, we have 1,100 shares. So if we do 1,100 times the par value of 12, and then the remaining amount is basically just 22,000 minus this 13,200 is excess paid in capital. So hold on, I think I messed this up because this is just the declaration date. So we have common stock dividend distributable, and that the rest of it is okay. So let's check. Okay. So now we actually distribute the stock dividend. So in this transaction, we had this payable or this liability. So now we're going to actually issue the shares. So we need to clear out So we see here we clear out this liability we created here, and then we actually issue the shares at par value. And again, the excess amount was already captured here in this paid in capital in excess of par. So in this actual distribution of the stock dividend, we're just dealing with the par value. Okay, so now looks like we have a treasury stock transaction. So we purchased 1,800 shares at $20 per share. So let's just do the math. We have 1,800 shares, $20 a share. So the total amount of cash that we paid is $36,000. So we're going to have common stock treasury, and we're going to have paid for it with cash. Okay. And now we're going to declare a 20-cent per share cash dividend on the common stock outstanding. So we have to keep track of the common stock outstanding because we have this 1,800 shares that we just purchased, so those are no longer outstanding. Okay, so let's do the math. So there were, what was it, 22,000 shares outstanding, and then we bought, let's see, okay, so there were 22,000 shares outstanding, and then what happened? We had a 5% stock dividend, which increased the share count by 1,100, which we had here. But then we also bought 1,800 shares in this Treasury stock transaction. So the total number of common stock shares outstanding now is 21,300. So we're going to pay 20 cents on each of those shares. So $4,260. And so we are declaring this. So we're going to have cash dividend of 4,260. And then we have a dividend payable, same amount. Okay, so now we're going to do the statement of retained earnings. So we're going to probably need, okay, so here's our table. And so the retained earnings at the end of 2015 is our starting balance. So we're going to have some net income, and let's see if we have some information on that. Okay, 82,000, which we see right here. And so we add these two up to get a subtotal. Okay, now we have to account for our dividends. So we had cash dividends, and we also had stock dividends. And so the amounts, we had 4,260. Let me go to use parentheses. And then the stock dividend was 22,000. And so our ending balance is going to be this minus these two. Okay, so now we're going to have to do our equity section of our balance sheet. So there's no preferred stock, so we're going to start with our common stock. So we have from here, we see that there are 300,000 shares authorized. Okay, so now this has changed. The issued and outstanding shares have changed. So issued is basically, we had the original 22,000 and then we issued 1,100 more with our stock dividend. So 23,100. But then we bought some treasury stock back. So our total outstanding is 21,300. Okay, and so now we have to basically calculate the par value of the stock that's outstanding. Actually, sorry, I misspoke. We have to calculate the par value of the shares issued. The fact that we have some treasury stock is going to be accounted for later in this statement. So for this line item, we're just worried about the shares issued. So basically, we have this many shares, and basically at $12 par value per share, it's $277,200. And so then we have to calculate our paid-in excess to par. So we see here that there was a beginning balance of $340,000 from last year, and then we added another $8,800 in this transaction with the stock dividend. So then our total is going to be $348,800, and then total paid-in capital. When you add this plus this, okay, so now we have a couple of other things. We have our retained earnings, and we got that from here. And then we have our treasury stock. Okay, so how many shares of treasury stock do we have? I think it was 1,800. And the value of that was 36,000. And again, since we bought these shares back, they're actually decreasing our stockholder equity outstanding. So we're actually subtracting the value of this treasury stock away. Because if you remember here, I mentioned that we are basically using the shares issued for this, but then we have to subtract out the shares that we bought back as treasury shares. So that kind of happens here. And so we take the paid-in capital, we add in retained earnings, we subtract this treasury stock, and we get our total. Oh, let's see what happened here. Okay, I see my error. It was this 340 plus 8,800, so it was 348,800. Oh, okay. Okay, so this got, oops. Okay, last chance. I think everything is right here. Okay, that's it.